Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
The start of the year is a good time to take stock of where world trade stands after an unprecedented year. Let's start with the US. The year was marked by some of the highest tariff rates seen in the US in a very long time. Did this have the intended effect of reducing the US trade deficit in goods and services? Well, absolutely not. The most recent numbers available are from November 2025. According to the BEA, year-to-date, the trade deficit increased by 4.1% compared to the same period in 2024. Some of this was from the massive increase in the trade deficit earlier in the year as companies were stockpiling imports in anticipation of tariffs. However, so far at least, there hasn't been a dramatic reversal in aggregate imports, even in the monthly numbers. One of the primary targets of US policy was China, for which tariffs are a little under 50%. And indeed, US imports from China have fallen by around 20%. At the same time, the US increased its imports from other countries, such as Vietnam. Despite this, China reported a record high trade surplus with the world in 2025, a whopping $1.2 trillion. This was a 20% increase over 2024. China increased its trade surplus with countries in Africa, in East Asia, EU, and Latin America. Throughout the upending of the world trade system under President Trump, China has tried to project itself as a defender of the rules-based global trading system and an opponent of protectionism. And although Canada, the UK, and EU, and others have made public demonstrations of cozying up to China, I think this is all for strategic positioning in negotiations with the US. They continue to be wary of Beijing, which has been no less ruthless than President Trump in using its economic might in pursuit of its perceived self-interest. Most recently, the flood of inexpensive Chinese goods in the rest of the world hasn't been well received, since those countries naturally fear for their own domestic industries. There have been familiar charges against China of dumping and of currency manipulation to keep the price of exports low. Many countries have initiated anti-dumping investigations and complained to the WTO. These have sometimes led to retaliation by China and then charges of heavy-handedness. Prime Minister Mark Carney summed up the dilemma for the rest of the world in a now famous speech. Quote, "It seems that every day we're reminded that we live in an era of great power rivalry, that the rules-based order is fading, that the strong can do what they can, and the weak must suffer what they must." He went on to urge the middle powers to act together. While that may be too ambitious a goal, what we have seen from the middle powers is a concerted effort to diversify the risk that comes with integration with the economies of US and China. This involves balancing trade between the two powers, but also increasing trade with other countries. For instance, the EU bloc concluded trade deals with the Mercosur bloc of countries and then with India. Interestingly, the US and India concluded their own trade deal shortly after. Moreover, faced with an increasingly unpredictable United States, the middle powers have been forced to invest in their own capabilities. And not just from the national security perspective, although Europe has stepped up its defense spending. We've also seen internal economic reforms in countries as diverse as Canada and India. This has surely been an unintended benefit of the harsh tariffs and frequent threats emanating from Washington. And the data shows that intra-regional trade in East Asia, in Latin America, and in Africa has also been increasing. Global trade reached a record in 2025, more than $35 trillion, and this reflected in part an increase in so-called South-South trade. So, with all the restraints on trade that the US imposed and all the talk of the demise of the rules-based multilateral trading system, the band played on. The rest of the world didn't trade any less. In fact, quite the opposite. Indeed, even the US has been trading more than before. It seems the obituary for globalization may have been more than a little premature.